Today's date is August the 12th. It's a Fed day, and we just want to take a sort of a brief look at some of the indications that we had from our group reversal system and a few other things that we can combine into this discussion. What we're first going to do is move over to a 1-minute chart and take a look at what the premium indicated yesterday afternoon, as well as a little information about the pattern of the day. Now, on the previous day, on August the 11th, at 12:46 p.m. Central Standard Time, the S&P premium, which is this line here, hit a new low for the day. This forecasts for us that the Spoos are going to return to a price of $8.92 or less. You can read up on our website under the section on premium the rules that we use for reading it, but that's the general method that we use for reading the premium. This forecasts a return to $8.92 or less. As we see, that's exactly what happened later on during the day into the overnight market, and was approximately where the market was on the morning of the following day, which is today, August 12th, and we saw the accompanying rally. Now, another interesting thing that we see happening from this pattern, what we have here is what we refer to as a yellow day pattern. That pattern is identified by way of the shape. It looks somewhat like an inverted V. We have a rapid sell-off in the morning, and then what we typically see take place during the course of the day is a relatively lackluster move sideways into the afternoon, followed by a robust rally into the close, where the high of the afternoon exceeds the high of the morning, which is here. Okay? The high of the afternoon would typically exceed the high of the morning, generally being reached in the last half hour. When that pattern does not come to fruition on the day that it started, it most likely will occur in the morning of the following day. So here the yellow day pattern peters out in the afternoon. We see a return to the low as predicted by the premium, and then on the following morning we have the robust move up very quickly in the morning and exceed the high of the previous day. That is a typical yellow day pattern where we rally in the afternoon. Now there's a yellow day pattern where we tank in the afternoon, but that is not what this pattern was forecasting at all. And what we'll do now is go back and take a look at our tick bar charts, and we'll analyze actually several different tick bar charts that we're using to track the activity today. Now, for those of you that have been watching our videos, you're aware that we use a spread of 9 different charts where we're tracking group reversals on an array of tick bar intervals that range from 50 tick bars all the way up to 440,000 tick bars. This particular chart is representing the, I'll show you this in a second. This is using the third group of tick bar intervals, which range from 20,000 up to 30,000. From 20 to 30,000 tick bars. That's what we're tracking here. And then, by way of the methodology that we use for updating the MACD calculation, we now take that data and send it or transfer it over to a 25 tick bar chart. This is a 25 tick bar chart. And we paint the color of the bar according to the number of different tick bar intervals whose MACD trend is agreeing at the time. And so we have a series of different colors that we use to identify where we're at. And we'll explain those colors as we go on here. Now this is the overnight market. This is from the close of the previous day. And what you see here is a move from cyan to dark cyan, which is an indication of strength. But when we go from dark cyan back to cyan, that's an indication of weakness. So we have some weakness developing in here. We're even getting weaker where we move from cyan to a white, and even weaker still as we move into green. Weaker still until we get into red. But as it moves back to green here, now this is what we call a typical group reversal and a change in direction. Red back to green, momentarily it goes back to red, then gains strength again back to green, and we see the beginning of a move up. With our 6-color system, we'll explain this a little bit more. A green bar represents that really only 1 out of 6 has a positive MACD. White represents 2, cyan represents 3, dark cyan represents 4. 4 out of the 6 has a positive MACD. So that means we're going from 20,000 to 22,000 to 24,000, 26,000, 28,000, and ultimately 30,000 tick bars. And each of those individual tick bar intervals, we're tracking and calculating the MACD, updating it inter-bar. Now, that's what's producing these different colors. As we move closer to the open of the NYSE, get a little bit of a reversal right in here, and then right at the open, just before it actually, we get another nice reversal. Good time to go long. Here's another opportunity to go long on that reversal. It's brief. And what you see here in the way of dots, we're not going to address that, but these are